So when you compare the compliance aspect from the government, how do you see Hong Kong versus, let's say, US or EU?
I think we have the best liquidity. I think there are over 40 licensed broker-dealers in Hong Kong, and 90% of them, they already onboarded with HashKey. You can see them being trading on HashKey already, which means they actually foresee everything way before everyone realized that Hong Kong is getting serious this time.
You have been operating in the country for quite a few years now. What are the key challenges you have faced as an exchange operator there?
There are two ways that I see this question. One is,
how have you been? How was your day?
Pretty swamped lately. I think for a very regulated exchange, when we see the market is a bit delayed to those, in general, the whole crypto market. But absolutely, this year is being, you can feel the bull market is coming back, and also a lot of TradFi institutions, they are way beyond our expectation. Like they are super passionate about all those stable coins and all those other play adoption in Hong Kong. And also the regulators, they actually move faster than we thought. All those stablecoin bills and other details of those crypto regulations Hong Kong is actually moving faster than we thought. Although in the past, a lot of people is complaining. Regulators are always being slow. But the fact is they're actually, on the track.
Yeah, good to hear that. I mean, especially like from 2024 and this whole 2025, the regulators have moved really fast. I mean, US does something, and especially Hong Kong and parts of Asia, they immediately follow. Like at first it was ETFs. So spot ETFs came almost immediately to Hong Kong, and now stablecoin regulation. While US is on the verge of implementing stablecoin regulations, here we are. I mean, in Hong Kong, it's starting from August 1st, right? The stablecoin regulations coming from August 1st. So how do you say, like from an exchange perspective, that stablecoin regulation will affect you? How are you managing the regulatory part of the stablecoins? You must be offering stablecoins even now, but how would it change once the regulations set in?
I think it gives us more opportunities to really outstanding in crypto exchange business. So in the past, we actually trade a lot of stablecoins. So I run the OTC desk at HashKey. 80%, I would say, in the past 1.5 years, 80% of our flows is on-ramp and off-ramp. Maybe in bear market, there are more off-ramp. Lately, we see the flows are more balanced. And the number is increasing dramatically. So compare Q1 to last year Q1, the on-ramp, off-ramp flow is ramping up like 4 times. And when we see the Q2 numbers, it's actually over 10 times growth year to year. So this is like really significant. And thanks to, all those banking routes that we have, it makes more sense for us to being a bridge between TradFi and DeFi, between crypto and, real world assets. Yeah. We don't think it's like a, not sexy business doing stablecoins. We actually love it. And we think making it very efficient and having a really high turnover is an art. Talking about the stablecoins bills in Hong Kong, we've been talking to a lot of stablecoins company, like Circle, like Tether, like a lot of other names, big names that you can see on other exchanges. We also invest in one of the stablecoins company, which is actually in the Hong Kong stablecoins sandbox. There are other 2 stablecoins company in the sandbox, so we actually talk to them too. So this is the first that we are hedging on the asset in Asia instead of US dollar. Although you can say Hong Kong dollar is also pegged to US dollar, but it's still different. It's regulated by Hong Kong government, right? It's, having the adoption in Asia financial market. And also we have our own, local license exchange to run it. The participants, instead of like very retail focused, for example, like in Europe, it's always like Mika is always very retail focused. In Singapore, it's always very private wealth focused. US is not story. Japan is very isolated market. In Hong Kong, we actually have a very mixed base of users, and also we see way more institution players on day one than any other markets. So this makes the whole story very interesting. Also, we are on the edge of crypto is no longer about, pumping and dumping, like trade a lot of cryptos currencies on, high leverage. We are actually on the edge of shifting from, like cryptocurrency trading into a Web3 world. I don't know if you can understand what I mean. So we see a lot of Web2 players in this playground. We actually have on OTC that we actually have more TradFi users than the crypto users.
Yeah, I mean, I have heard that story around like in US as well. Like TradFi has really got into it, and most of the big institutional firms and companies are looking to launch a stablecoin as well, given the regulations are coming up so fast. So they want a pie of it as well. So compared to, let's say, West, how do you see the regulatory movement around stablecoins compared to, let's say, Singapore or Mika? As you said, Mika is more retail focused, right? And Singapore is more private focused. So you said Hong Kong will be a mix of both. So how do you see stablecoin issuers adapting to the new regulations in Hong Kong?
Take one step back. Let's say, like, what's the difference between Hong Kong and Singapore, between Hong Kong and Europe, right? So Europe, actually, I think they are more like US. There are a lot of, projects, a lot of, Web3 foundations, a lot of high frequency trading firms that they are like trade so much in equity market, and then they shift into crypto market. So this is the core business of those, markets. Singapore, what I say is like very private wealth emphasis, which means a lot of, very wealthy families and a lot of private bankers, they're in Singapore. And we have to admit that they are very successful in, gathering a lot of, wealthy Web3 entrepreneurs over the past 3-4 years when China mainland actually closed out, those Web3 business. But Hong Kong, for all the time, it's like a central of Asia. It's very mixed, as in they run a lot of business. So they have the China mainland economic as the backing. There's a very mixed industries in China. There's internet companies, there's, a lot of infrastructure happening in mainland, but also in Hong Kong, there are also a lot of banks, financial institutions. There are a lot of trading teams too. There are also like startups, hedge funds. So you can see all kinds of people in Hong Kong. And because this is a very, like people are squeezing in this, Hong Kong island. So all the informations are exchanged very quickly. So when we start to do those regulated crypto business in Hong Kong, everyone is a day one participant. So this is why I don't see, it's not like there's not a focus, but on day one, there's enough user base to start. So there are I think there are over 40 licensed broker dealers, traditional equity dealers in Hong Kong, that they get their license uplifted for VA trading. And 90% of them, they already onboarded with HashKey, and they are like preparing for a long time, because getting the license uplifted usually take like 1 year at least. But you can see them being trading on HashKey already, which means they actually foresee everything way before everyone realized that Hong Kong is getting serious this time.
Yeah, good to hear that the interest is like pretty high in Hong Kong. So when we talk about the compliance requirements for stablecoin issuers, how do you compare it with the West? Like in the West, there's transparency rules where you need to have, like in Mika, where you need to provide transparency norms for your what do you say, the backing for your stable coins. You have to show it to the government that you have enough backing for the stable coins in circulations, and there are stringent compliance requirements for issuers, because of which like USDT or Tether has to like delist from Mika. So when we compare the compliance requirements for stablecoin issuers in EU, US, how do you see it in Hong Kong? Whether it is like on the harsher side, or whether it is on the easier side, or in the middle, where that focus is also on investor protection as well as helping flourish the stablecoin market. So when you compare the compliance aspect from the government, how do you see Hong Kong versus, let's say, US or EU compliance requirements for the stablecoin?
So I take this question as if it's very clear that SFC or HKMA give the guidelines for the Hong Kong stable coins, right? I think yes, there's guidelines. There's a lot of hints, but I still think that there are gaps remain. So likely all those issuers, you need to get everything audited. You need to have the monthly reserve, and for example, we actually have a FRR thing every day we need to upload to the regulators. I think which will be very similar in stablecoins issuers company. They probably need to upload some message to make sure that you can prove you have enough reserve every minute, something like that, right? I think there's not enough guidelines on like how exactly we need to segregate the stablecoins trading, or what kind of KYC and KYT we need to do on the Hong Kong stablecoins, because this is it will coming out when we actually going to list a Hong Kong stablecoin. By that time we'll find it out. And I think also we don't see a lot of guidelines in how can stablecoins be used in DeFi pools, because getting stablecoins involved in leveraged, decentralized financial instrument will be very different than putting your asset in a bank. So what is going to be like for that? Also, how are we going to deal with cross-border flows? For example, USDT is like everywhere. It's global already. But Hong Kong, I think it might prefer, it didn't say it has to be HKD pledged ones, but I think most likely the Hong Kong stablecoins will be pledged on HKD. Otherwise, it doesn't make a lot of sense for those, sandbox players to do that, right? So how will those cross-border flows work? Who are the user base they are actually serving from the beginning? So those are still, I think, the gaps that we need to find out later.
I mean, you think it will the regulations will evolve over time as players come into the market, and how market or users behave? It will evolve eventually.
Yeah, and also I think Hong Kong, we are doing a lot on RWA. You see a lot of tokenized, stocks or like bonds, and even on HashKey exchange, you can see two money market funds. They are tokenized. One is USD based, one is HKD based, and we have more tokenized, funds coming up. A lot of high yield products that are on the pipeline, right? So how are those stablecoins going to interact with those tokenized products? It will be very interesting.
We are looking forward to the Hong Kong's evolution in crypto as well, because Hong Kong is relatively new when it comes to crypto. Like they turned pro crypto like two or 3 years ago. Like the government got into action, releasing pro crypto innovation and regulatory guidelines. So do you feel like being your affinity to China, mainland, do you think more players from mainland would eventually get on to Hong Kong businesses directly or indirectly? Like many businesses in mainland has shown interest, like JD.com has shown interest in launching a stablecoin. Alibaba's subsidiary in Hong Kong is probably planning to launch a stablecoin as well. So do you think more mainland players would eventually arrive into the crypto market via Hong Kong? Or do you think it's still a strict firewall or some sort over there, and there will be restrictions?
I think people are definitely very, very interested in that from mainland. And I think everyone in Hong Kong, like for myself, I came from mainland. I work in Hong Kong, right? Obviously, we expect that mainland will be like reopened again to crypto because it like literally we started so many years ago and place everything for this industry. So we expect it to be reopened, although we don't know when. But if you look into that sandbox of Hong Kong stablecoin, you'll see three companies. One is RD Technology. One is JD. So JD is one of the biggest e-commerce company from mainland. So this is an affiliate company that they set up in Hong Kong, and they are in the sandbox because global they have a lot of e-commerce business happening. So it makes sense that they have their own token to do the settlement 24/7 cross-border instantly. So there's a third company. It's I think it's a JV between Standard Chartered and HKT. So Ant is also an affiliate company with Alibaba. So this is, you can see those mainland backing of those stable coins, although they are not like physically
involved
launching the projects, but you can see they're backing them up. And you can see the reason why they launching those stable coins is because there's an ecosystem behind them that allows the stable coins to run.
That's like really good to hear. Like mainland, if not even directly, they are backing innovation in crypto indirectly through their e-commerce businesses. So when you see Hong Kong from a crypto perspective in Asia, do you feel like it has done enough regulation-wise to put it as a center of crypto in Asia, especially at this point? Like there's Singapore, there's Japan as well, but Japan is more conservative. But I guess new governments are trying to chime in with the stablecoin regulation and ETFs. So compared to, let's say, Japan, Singapore, or Thailand, how do you view Hong Kong in terms of regulatory space? Do you feel it has an edge over those countries and it can become like a top destination for global platforms, or do you feel it needs to up its regulatory game more?
There are two ways that I see this question. One is the institutional liquidity in Hong Kong. I think we have the best liquidity, not only for crypto trading, but also for like equity market, bond market, commodities. Like naturally, it's a liquidity hub before we see Hong Kong as a Web3 hub. So everyone is trading Hong Kong. Everyone is settling Hong Kong. The banking system, the settlement system itself, and also the IPO, the equity market is more powerful than any other, regions in Asia. So this is the edge why Hong Kong can do RWA, because there are enough valuable assets you can put on, chain and tokenize it. And you have enough, user base here, enough money here. There are funds, there are retails, there are high net worth individuals that they will put money into those products. And there are enough professional investors understand the products well. So money actually flows in Hong Kong. So you should launch a lot of, creative products and people buy it. So second is, I think, a lot of other regions, they have their own, own way to trade. For example, in Japan, you cannot trade USDT, right? You have for long to trade DAI. Thai bar is also the FX cost compared with Hong Kong dollar to US dollar. Thai bar cost was right. So in Singapore it's like private wealth emphasis. So the capital market in Singapore is not as big as what Hong Kong has, but the gap between Hong Kong and Singapore is actually very small. So you can easily move money from Singapore to Hong Kong. You can also easily move money from Hong Kong to Singapore. So during the pandemic, you can see there are a lot of money flows to Singapore because of the private wealth there and all those other infrastructures there is more attractive. But when you see Web3 regulations is actually adopted in Hong Kong, we can tell a lot of flows is coming from Singapore, flows back to Hong Kong. And it's
there's interaction.
20 minutes transfer from Singapore to Hong Kong. And if you stablecoins, then it's 70 block
Seamless.
confirmations.
So, as an exchange operator, like you have been operating in the country for quite a few years now, what are the key challenges you have faced as an exchange operator there? Like from a security point of view or a regulatory point of view, what are the challenges you feel you have faced? Which, if you shed some light on it, maybe other exchanges can work or develop so that they might not have to face similar challenges.
I think for us, we are a spot exchange. Of course, we don't mind to do more challenges on derivatives trading in Hong Kong, but that really relies on when the regulators will allow us to do that. We are also very early in RWA, and we can tell that there will be a lot more things going on in tokenization, right? But I think the challenges for exchanges and for any new participants in the stablecoins, it will be like, first, there is security risk. So public blockchain is like a dark forest. So in many years, hacks, Oracle attacks, and all those explodes, it's real. Every year you can see there's hacks happening, and there's a lot of money getting hacked from a lot of trustworthy counterparties. And we don't see how it's going to be stopped. So for like us, we actually spend a lot of money and we spend a lot of time to set up a system that to make sure our users are being protected. But I don't think it's easy to be copied because it's actually pretty costly. For example, 98% of our token user assets, they are stocked in cold wallets. So only 2% will be left in hard wallet. Yeah, and we use Standard Chartered as our custodian bank, right? Not a lot of exchanges or not a lot of people will have the partnership with Standard Chartered. You have to get full license. You have to, strong business relationships. And 98% of a cold wallet, half of it is being insuranced. So we actually buy a huge part of the crypto insurance in the world. I think we actually buy more shares than Coinbase did. Correct me if I'm wrong, but we actually spend a lot of money on insurance. We also have a team doing the maker checker internally to protect the whole procedure is not being easily exploited. So if we have to spend so much time and money on the operations, protecting user assets, I think a lot of other competitors, they have to copy the same level of standard because we are actually setting the bar here. So if you want to run a regulated basis, so now this is the bar, and the bar is costly. So for stablecoins company, it's the same. Maybe it's easier for them to manage the fiat part treasury because they can partnership with a bank, right? Put the fiat in bank. There's nothing else to worry about. But how do you manage your tokenized treasury? How do you manage your own stable coins? How do you send them cross chain? Because cross chain is also,
very, very risky.
So this will be a challenge because a lot of company, they came from a tech company background or a fintech company background. They are not from a blockchain background, so this will be new to them.
Right. Thanks for the perspective, and really good to know that you keep 98% of your users in cold wallets, and most of them are insured. So it's a very, very good step which other exchanges can definitely follow.
And I think this is only the first challenge, right? So there's more challenges coming up because you don't see launching stablecoins just to do the settlement, right? Obviously, this is one of the biggest options, but you also want to have the stablecoins to be used in the financial infrastructure, right? How do you position that? So some applicants to the Hong Kong stablecoins program, they actually don't grasp how DeFi change the risk model. For example, if you are going to use your stablecoin in the lending pool, like how does that lending pool behaves, and what's what's mechanism behind that lending pool that differ from a TradFi lending desk. So this is also there are a lot of things they need to think about in adopting a new stablecoins into the ecosystem.
I mean, yeah, thank you for that perspective. And I have taken enough of your time, but for the last question, I will ask you about the RWA, the real world asset tokenization, which you talked about earlier. You mentioned that Hong Kong has a bunch of liquidity in the market, and RWA is something which is like cropping up. Well, BlackRock is backing it. Most of the top firms is tokenizing US treasuries. So how do you see RWAs? Because RWAs are not new. I mean, earlier we had security tokenization, but like 4 years before, you used to call it securities tokenization, but now it is now being called as RWA tokenization. So how do you see this new genre of crypto moving forward? Like every bull cycle, we get a new use case, right? And this year, it seems RWA is that use case where everyone is bullish about. So how do you see its future, like in 4 years? Do you think that trend will be still there? Because most of the trends in the past bull cycles have vanished. Like multiverse was very big. Metaverse was like very big last bull cycle. I mean, Facebook literally changed its name to Meta, but they are not talking about metaverse more right now. So how do you see RWA as a trend in this bull cycle, and how do you see it will stand the test of time, whether it will grow or it will be another trend that will perish to the bear market, or it will be different this time?
Yeah, I like the story that Facebook changed their naming to Meta, but actually I don't see like what exactly it does with Meta so far. But I can see people like try a lot. Like people really try hard to, get creative ideas, like being real. RWA is the same thing. I heard about RWA, concept many years ago, and when people are still debating if Bitcoin is a scam. And many years later, we start to put money, like I myself tried some DeFi protocol like Ondo, right? So people get used to it and actually see the value and see how amazing the mechanism behind that is. And we are happy to see this is happening. So same for the stable coins. Why people use stable coins? Like stable coins is actually, I don't think it's a coins. It's just money.
Yeah.
But it's also not digital money. It's not a utility token. It's a tokenized
Digital version of the real world. Yeah.
And there is someone, give the credibility to that paper, and you can use it anywhere, and you can lend it or borrow it from someone else, and you can do the settlement with it, and you can place it in the bank or in your phone, in your Apple Wallet. So tokenization is a trend. RWA is also a trend. The asset on the ground never change. So a lot of projects come to us and talking about tokenization, and we're trying to say in a nice way that if that asset is valuable or like liquid, it will be valuable and liquid anywhere, on-chain or off-chain. If you only want to put something on-chain because you think we have another group of people, they have the knowledge gap, so they will buy this product, I don't think that will work. I think we put valuable asset on chain because it gives more possibility how to trade it, and it clear a lot of bars between different jurisdictions. There is a trend that this year there are a lot of tokenized stocks. It's because if you want to trade NASDAQ stocks and you don't have a broker-dealer accounts in Asia, but you happen to have a exchange app and they list that nice stocks, you can just trade that, right? If you want to use Bitcoin as collateral, then you can trade that. Although you cannot do that on HashKey in Hong Kong yet, but this is a trend. We are going to get there, and it might take many years to make sure every step is secure and every calculation is like is correct. So it doesn't mean that at this time that RWA is like overly pumped. I think it's good to keep the passion in that and keep trying. Even a lot of projects, in the end, it might end up that like nothing, like many other Web3 projects, but it really pushes the whole industry to move to the next level.
That's a good way to put it. So yeah, I mean, I would say like that was like great insights into the Hong Kong market, the stablecoin regulations coming the start of August. And thank you for taking out the time and talking to me. And despite the issues we faced like few minutes before starting this interview, stuck with us to continue this. And hopefully we'll talk again, and I will get more insights from HashKey about the Hong Kong markets. So yeah, thank you very much for taking out the time.
Thank you for having me. And hopefully in the near future, we can roll out more, exciting projects, and we can have more to talk about, not only about HashKey, about, everything in Web3.
Yeah, in general, Web3, yeah, right. I mean, definitely RW will be on my radar, and we'll be talking more about that in the future. But yeah, thank you for taking out the time and explaining to our viewers like how stablecoin regulations is panning out in Hong Kong.
Yeah, thank you.